Okay, good evening and welcome back from our tea break. And this is the second last session of the day on responsible investing. Before we start with our three esteemed panelists, I just wanted to share that I've been coming to the AIWM Summit for the last 7 years. And this is the first year that we're talking about topics like impact investing, ESG, and socially responsible investing. And in some sense, this topic has really seeped into the collective consciousness of not just investors, but of the world at large. We've seen in the last couple of years, as India has had an economic slowdown, the importance of governance. We have seen with some of the global warming issues and climate issues, the importance of the environment. And at the recently concluded World Economic Forum at Davos, the climate crisis was the #1 topic for discussion. And we also have a number of emerging social issues that are being tackled by investors and companies alike. So with that, we have three really fantastic panelists and experts in this field. Anurag, who has helped to build Aavishkaar and the Aavishkaar group companies for the last 15 years. Ravi, who is the CEO of Northern Arc. And then Shachindra, who runs the SME and MSME focused Ugro Capital. And prior to that was the group CEO for Religare. So welcome, guys. Let me kick it off with you, Ravi. I mentioned a lot of terms. Could you tell us what all of this means? What is ESG? What is SRI? What is impact investing? And how does one make sense of this alphabet soup?
So thanks, Nalin. And you're right, it is an alphabet soup. It is also a topic which is very pertinent nowadays. And these terms get thrown around a lot. And they tend to make a lot of headlines saying that everybody's launched ESG funds. We should invest responsibly. We should consume responsibly. The corollary to that is as if we were doing everything irresponsibly earlier, which is not the case. But as soon as you say investing, responsible investing are pretty much together, right? I mean, nobody invests irresponsibly. But here, I'd like to break it down a little bit into what exactly do we mean as the first layer of responsible investing versus some of the additional things which are happening globally but have not found their way in India as yet. And some of the terms are used interchangeably in some of these contexts. So responsible investing is largely, you can say, values-based investing. Right? You want to direct your money such that it follows certain values that you identify with. And we at Northern Arc have, over the last 12 years, pretty much done that. We've invested in financial inclusion. That's been our mission. Over the last 12 years, then we moved into clean energy, we moved into logistics, we moved into healthcare, agri and food tech as well, but still largely on financial inclusion in the underserved and underbanked areas of the country. And we facilitate about 80,000 crores. So it's not as if it comes at the cost of returns. Right? So we've done 80,000 crores towards responsible investing. But here is the grain. There is no discount on returns as yet on this aspect. So to give an analogy, it might just be like, suppose you buy vegetables and groceries every day. You prefer to buy it from your kirana rather than go to a supermarket because you want to help the local ecosystem, as it were. But you still want the same price and you want the same quality. Now, activities linked, or say investing linked to these activities is responsible investing first. So it's largely a filter. I will not invest in certain negative sectors such as tobacco, alcohol, environmental degradation such as mining, anything that has child labor, etc. But it doesn't add on to any outcomes. Right? So the second layer is where you have outcome-led financing. Now let me give you an example of that. The first impact bond in the world was actually launched in India in 2015. Here, an investor had actually directed capital with a certain social mission, saying that this money, suppose I've given 100 rupees and I want to get 110 at the end of the first year and 130 by the end of the third year. I will get those 30 rupees of returns only if certain outcomes are met. Now, those outcomes in that particular bond were linked to saying that there are about 18,000 students in Rajasthan, girl students, who are out of school. And if you can get enrollment of these out of school girls, and if they can pass certain tests in terms of their learning ability, then I will forego the interest. Right? So here only the principal comes back. Or in some cases, you can even take a shortfall on principal, as long as the outcome is met. That is prevalent globally, but that is not in India as yet. So ESG, SRI, which is socially responsible investing, has these layers. The first layer is just primarily impact in terms of where you want to direct your money with no haircut on returns. The second layer is when you actually want to take a haircut on returns, but want to use your capital for driving social change, which you're seeing as absent in society today. And the third one is actually just charity, and there's not enough money in the world for the number of things that we want to do. So I will stay away from that. So I think that kind of covers the space where we believe impact financing is about.
Perfect. Thank you, Ravi, for that introduction. Anurag, I'm going to come to you because you've scaled IntelliCap, Ugro, Arohan, Aavishkaar, all of that in the last 15 years. What are some of the challenges that you have seen in taking it from $1 million to $1 billion with a B in the last decade and a half? And maybe tell us about that journey.
Yeah, sure. So actually, we started in 2001. I have been part of this journey since the last 15 years, but the founder, Vineet, actually started Aavishkaar and IntelliCap with this whole idea of taking risk capital to rural India, investing in for-profit businesses and creating developmental impact. This whole concept, there were basically Aavishkaar and Acumen. These were the only two impact-focused funds that were around at that time. And in fact, the term impact investing itself got coined much later in 2007 in a conference in Bellagio hosted by Rockefeller. So this was a pretty novel concept. Earlier, if anybody was working in the development sector, you were mostly working for a not-for-profit. And as Ravi mentioned, you were essentially trying to channelize philanthropic capital. And it took a long time. So actually, it took about 5 years to raise that first $1 million, right? So there was no pool of capital that was allocated towards it. Now the situation is very, very different. Of course, the key thing was, we started with 1 lakh rupee of capital, so even $1 million, 6 crores in 2005 was a big amount for us. We started investing very, very small amounts, 10 lakhs, 20 lakhs in rural businesses with the whole idea of trying to see, so the idea was twofold. One was capital, which was identified as a gap to scale businesses. Risk capital, so venture capital model implied to that. The second was, the gap was intellectual capital or human capital. And we set up simultaneously 2 companies. Just capital alone without the ecosystem to support the entrepreneurship we thought was not sufficient. So we built up an advisory company, IntelliCap, which also hosts a platform called Sankalp, where we bring together various players in the ecosystem to support entrepreneurs, from incubation support to capital support to linking them to policy advocacy, etc., etc. So the idea was, can you create a platform where you can also offer different kinds of capital? So we started off with the venture capital model. We were one of the early investors in microfinance, which again, when we started off in 2005, the whole industry was about 500 crores in India. Today, it's a 2 lakh crore industry, with Bandhan being the largest player, already the 5th largest bank in India by market capitalization. So that space has really grown. A lot of people know us for the work that we did in microfinance. Again, when I talk about ecosystem, not only did we incubate companies from scratch, we actually had an incubation arm which used to identify entrepreneurs. We had a 65 module package where we would actually work with the entrepreneurs to incubate them from scratch. We would then come in and invest. So some of the companies that got incubated were companies like Utkarsh, Suryodaya, Disha Fincare. All of these have become fairly evolved banks. We also invested early on in companies like Equitas, Credit Access, which used to be called Grameen Kuta then. So we were able to go in, and many of these were actually either non-existent We actually literally pulled out an individual from a job and encouraged them to start. Or, these were not-for-profit companies. We helped them transform. So we actually held training courses for them. Many of the entrepreneurs themselves didn't understand what is equity, all of that. They knew the business very well on the ground. But this was just one space. We were trying to replicate this in several other sectors as well. So we were early investors in things like sanitation, right? The Swachh Bharat Abhiyan got launched much later. Waste, water, clean energy, before all of this talk of climate change. So the idea is to basically support entrepreneurship at grassroots levels to solve these problems which are, not just the problem of the rich, but for the larger population, the underserved population, and do that in a business format. And I think the key to reaching from 1 million to billion is to do it in a sustainable manner. So we were able to deploy capital and generate a return out of it. So Aavishkaar Capital, which is our investing arm, has made about 65 odd investments. We've exited 30 of them, and we've been able to generate a return of 3.7 times on the exited amount so far. So that's also proof of the fact that if you do it well, you can also generate a commercial return out of this activity.
Perfect. Thank you, Anurag. Shachindra, I'm going to come to you. This is your second innings after a very successful stint building a whole range of businesses at Religare. And it's interesting that you chose in your second innings to create a impact-first organization. Tell us a little bit more about your thought process with Ugro.
Yes, it's a little bit of background of where I come from. So I'm born and brought up in Banaras. I started my case in a small city. Financial services largely is from people who come from very high pedigree background. I came from a background where my parents were teachers, both professors in university. First 6-8 years of my career I spent in corporate industry. I used to go to every weaver's house and figure out how they are not being able to finance even a small amount of money for weaving their carpet. And then for a long period of time, around 15 odd years, I got stuck into what I call the corporate world. And the circumstances I was thrown out from that place. And by force, I had to become an entrepreneur. But because I think so I was unemployable because nobody was willing to hire me. So that's why I say by force I became an entrepreneur. But I think so when I decided to do that, so I'll give you this example. My dad is a Ford scholar and a university professor. And every time when he used to come back to my home, he used to tell me that I don't understand the reason why these big companies pay you so much of salary. Because you don't do anything which is any meaningful. And I used to tell him, what do you mean by that? I work 18 hours, every day. He said, no, but you're not doing anything for society. Because look, I came, I was a Ford scholar. I post-graduated in US, did doctorate in UK, and came back to Banaras, and I was teaching for 40 years. What you have done in life? Because you have not written an article, you don't teach people, and I used to wonder, so when I left, I think I have to justify to him that I'm worthy of something. And that was the reason because I had multiple choices. Fortunately, my last organization gave me nothing except experience. So having built multiple diverse line of financial services business, I have chosen much easier lines to do, corporate finance, wealth management, private equity, a lot many other. But I chose the hard one. The reason because I felt that I owe this to my dad, that I have to create an impact. I have to better people's life. And second thing which I felt that there are a lot of microfinance industries have matured, but there is nobody who has tried to do create this impact at a broad format basis, at a size and scale. And this is also a function of professionals which, people like Aavishkaar who bring onto the platform. India, Lakshmi and Saraswati don't sit together, right? So the poor, guy who's blessed from Saraswati has to start with a very small capital and has to take 15 years or 20 years journey to get to a sizable capital. And that's why, creating sizable impact is difficult. Somehow I was naive and fool that I thought that I will be able to raise a large amount of capital. And I worked 4 years hard and I did that and raised 1,000 crore of capital. And with this idea is that we'll focus predominantly in small businesses and micro businesses, provide financing in a different format. So that's the reason behind it. It's a little more emotional and much more personally connected to my heart than very commercial logic behind it. But obviously, I'm obligated to my shareholders and to the people who provide capital. So in the same breath, I will definitely generate return. And I think so. I think so. That misnomer is gone. Originally, 10, 15 years back, when you talk about anything impact, environment, clean energy, people used to think it is a Dell Foundation or a Bill Gates Foundation's job. But now it has actually proven that most of the highest financial return has come from ventures which are impactful. So if you do worldwide correlation of return versus, so you'll see that people, if you are impactful, you'll generate better return, is my general belief.
So in some sense, values investing is the true value investing.
Yeah, it's some sense of that. Look, there are large corporates, my view is that unless you stand for something, for a business or in life, and which if your mission is not to improve somebody else's life, then that business has no meaning, and businesses which have no meaning would not generate return. So business has to have a meaning, and meaning has to improve people's life, especially in a country like ours.
Right. Anurag, Shachindra was telling us earlier that the mission of Ugro has helped them to attract high quality long-term capital from shareholders, both in India and outside of India. Has it been your experience, and what was your experience raising money from high quality LPs with this mission?
Actually, absolutely. And in fact, even before Capital People, incidentally, I'm also from Banaras.
That's very nice.
Like I said, we started off with absolutely no capital. The founders' capital base was 1 lakh rupee into the company. And that was IntelliCap, which was set up as a private limited company. And Aavishkaar was set up as a trust with 5,000 rupees. So that was the total capital infusion by the founders. Vineet himself as a founder was 29 years old, no experience. So imagine somebody who's coming from a forestry background with no capital, no credibility, looking to go and raise capital. So it was a struggle initially. And that's why it took 5 years to raise the first $1 million. But because it was mission driven, because there was a purpose much larger than just trying to make the maximum amount of money for yourself, we were able to attract what I would imagine is a good quality talent from not only India but from across the world, even when we were quite unknown and very small. And second, and most importantly, the people who were actually just very, very passionate about what they wanted to do. So we got a very, very strong, cohesive team. And that really basically helped us, build on that. And because we were able to demonstrate that, you can do this, you can create businesses, you can actually create a return as well. So initially, we got capital. In fact, the first $1 million really came from a bunch of individuals, not actually NRIs based out of Singapore, Indians, but based there. We then got the next bunch of money from the DFI community. We were fortunate in a sense that, we were focused in a space where suddenly there was a lot of momentum. Being an early entrant, we were able to, and I think also because we were incubating and creating stuff ourselves, we were able to get in early. We had deep knowledge of the space. And because we were able to demonstrate success early on, that allowed other people to come in. So today we have, as LPs, the top DFIs from across the world. We have pension funds. We have also been successful in raising capital from within India, from the HNI community. And this is also a very, very encouraging development, because for the longest time, all the capital that was flowing into the space was really foreign capital. But of late, even the Indian HNI community, there is a lot of interest of getting into the space. And in fact, in our latest fund, roughly 50% of our capital. So the proportion used to be 95% foreign capital, 5% Indian capital. In the latest fund, we have 50% Indian capital and 50% foreign capital. So we see a clear trend emerging that there is a lot of interest in, for this space in India as well.
Absolutely, and I think your multi-decade success also shows that this is a long-term trend, not a fad.
Absolutely.
Actually, I want to add
Yeah,
something
please,
to that,
Ravi.
based on what Anurag also said. If you look at our first equity investor, so Northern Arc got its first external equity investor was a fund called Leapfrog, which is a impact-focused firm out of United States. It happened 6 years ago. And at that time, we signed the impact principles and we followed them throughout as well. But now, post that, with every subsequent raise, the last two entrants in our company have been India Infoline and a Japanese mega bank, who are not really known for impact, and impact hasn't been their consideration. But the returns have been, for commercial returns and impact returns, there's been no difference. And hence, the split in terms of what kind of capital gets attracted has been equal across both impact as well as commercial, because impact investing has made sense, as what Shachindra said.
Yeah, in fact, sorry, I'll add that I think so, obviously as a young, new non-bank finance company, we raised 1,000 crore of capital, which was, I think so, in recent trend was highest amount. But it is, I don't think so, our philosophy of being, impact focused or being inclusion focused or, helping micro SMEs to generate it, that was never our pitch to investors. If you look at register of our shareholder and the capital we raised, it is all conventional private equity funds. And obviously everyone is conscious, everyone is responsible in investing, but that was not the pitch. Actually, the benefit which we will get is going forward. The amount of capital which is available on the debt side and in future is what so the only pitch when I used to go to conventional private equity, and which some of them used to register it or not, saying our business model eventually will attract much larger pool of capital. So what I'm promising is a very conventional business model. We'll generate return for you, but I will accelerate that return because this model will attract large number of pool of capital which otherwise don't come to conventional businesses. So number of DFIs, I call it guild capital, the amount of guild capital which is available in the world. So the disparity of the West to East, and that's why flow of money would keep coming to our markets, is very large. And if you can channelize that and can really create impact in society, then there is amount of capital is humongous. You have to be at it all the time.
And Shachindra, you can create impact with both debt and equity. It's not limited
Absolutely.
to a particular part of the capital structure.
Absolutely. As a credit provider, obviously, we are only providing debt capital. If you look at, small businesses and micro businesses, which holds the largest employment potential in this country, which are credit starved to the extent of roughly around $600 billion. So one of the other philosophy is that my view was that when people think about impact, first simplest correlation is microfinance. That's not true actually. That is obviously there. That's the bottom of the pyramid. But at the top of the pyramid also there is so much of a starvation, right? So amount of employment generation which can happen, how much families can get help by getting timely credit to every small business and micro business is also very humongous. So that's why when we think about business, we think about providing this credit across the spectrum in our defined selected sector. So we do business only in 8 sectors. We selected our sector keeping that in mind, that these are not sectors which don't do benefit to society at large. You can argue that every sector does benefit to the society, but there is prioritization. So we do healthcare, we do education, we do food processing, hospitality, electrical equipment manufacturing, light engineering, chemical, auto component. And we just don't go beyond that because that's a very sizable market. It has potential to generate roughly around 30 million fresh employment in this country.
Okay. I want to add an example to what Shachindra said in terms of impact not just being microfinance. Everybody knows that the number of income tax payers in this country is in single digits in terms of percentage, and hence you don't have formal records. It's a credit-starved nation. So when we go abroad and we talk to DFIs or LPs in terms of attracting capital, impact starts to get focused towards microfinance because for a European, microfinance is an immediate ticket towards saying that this is impact. But when we can argue that, okay, even mobile phone financing is impact. And they said, how is mobile phone financing impact? If I'm financing your iPhone X, then probably it's not impact.
I have an iPhone 5, by the way.
But if I'm, if it's a carpenter who has, say, a feature phone, right, and wants to upgrade to a smartphone, it just unlocks a world of possibilities. You can use Google Pay, transfer money. You can use the camera. You can showcase your work. You can record a testimonial by somebody who's done their work and use that for marketing. it's access to information which a smartphone provides and enables livelihoods, which is just not possible in the developed countries. So microfinance is one tip, but the entire access to finance for the new to credit segment, as we call it, or the ones who have not touched credit earlier because of lack of records, is enabling them to come into the system, get formalized, get access to credit, and is creating livelihoods. Yeah. So I mean, that's a very strong.
I would just like to add here that I think there's a lot of talk about microfinance when it comes to impact investing, and of course it has also a large disproportionate amount of capital has gone towards that, not only in India but globally as well. Yeah. But microfinance in India has been there for a long time. And as I'd mentioned, for about 30 years, it just didn't go anywhere. So there were a few things that happened why it suddenly, just completely saw this kind of exponential growth. And one of the key things was really that, the people were convinced about the viability and sustainability of the business model, its ability to, being in a structured, organized format. So a lot of these NGOs, which were probably not very well governed, converted into a well-regulated structure. They were able to show commercial viability. They were able to show the ability to generate returns. That's what attracted a lot of that equity capital, which was then followed by debt, right? And of course, there was some loose regulation, so there was a crisis, and then the regulation tightened, which attracted even further capital. So actually, that crisis was in some sense a blessing in disguise. For the same amount of capital and activity to follow in other sectors, it's important to show, again, the viability. And so for example, I agree with you that MSME financing market probably has a much higher multiplier effect, and it's probably 10 times the size of the microfinance market. There are a lot of people who are working in that space, but the default rates are far higher than what we see. The microfinance operates at sub 1% default rates. Yeah. We are talking about 5 to 10% kind of default rates there. Once we crack that piece, I suspect the amount of capital that will flow into that space will be even higher. Similarly, water is the next oil, right? If somebody, solves that issue, sanitation, you want to have affordable housing. All of these are big problems. And if you are able to create a business model which is not necessarily, if it is extractive, then it cannot be impact investing. But if it is done properly, fairly, ethically, and is able to create a profitable business model, there is absolutely unlimited amount of capital that is available around the world. In fact, there is capital chasing these kind of businesses, and you can actually drive a lot of value, both for investors, debt providers, as well as the people working there, and for the end clients. So
great. So I will be a responsible moderator and stick to time, since this is a panel on responsible investing. So I'll finish by asking each of you guys one quick question. Shachindra, I'll start with you. One regulatory ask on if you had to make one change at a legislative or a regulatory action for impact investing in India.
Look, I would say none. Reason for that, my belief is that anything which is driven by an artificial force never create long-lasting impact. Any form of impact investing has to come from people. Market has proven that there is no return differentiation between a normal investing and an impact investing. And why then we should ask for any form of a regulatory forbearance or a special dispensation? Obviously, there can be many incentives which be provided. As an industry player, we should not be in hope of getting that and then building those businesses. We should do it because we should genuinely have belief in that. That's my view.
Got it. Ravi, you mentioned outcome bonds. What is one global innovation in this space that you think will come to India?
So, last year also there was another impact bond that was done towards targeting health outcomes in Rajasthan. So it was targeted about 60,000 pregnant women in terms of ensuring that there's enough access towards maternal and childcare facilities, and capital was channeled towards this. But it is a mix. Like the structure has to be such that there is certain capital that comes in with a returns component, and there is a cross subsidy provided by other providers of capital, such as the foundations, like you mentioned, who provide grant capital. So as long as the outcomes are available, then they are happy to forego that. And that capital ends up providing the returns to these other senior investors who may not want to take a grant kind of thing. So these kind of innovations, India is ripe for doing something like this because otherwise you cannot get size. I mean, a foundation will come in with a 3 million or 5 million kind of check and you can only reach that many number of people. But when you add that as a layer to a proper commercial structure and there is some cross subsidy from in terms of returns to the other commercial lenders, then that pool can go to $100 million. And that will impact a lot more people. So it's a follow-on point in terms of the regulation as well. Regulation doesn't need to be such which pushes investment in these places, right? As you mentioned that there is enough of a returns case for doing so. And as soon as you start putting regulation to push investment in these, say if you mark out 2% of this has to come into impact funds, there is a lot of ESG washing, impact washing, and all these kinds of
like
practices.
Priority sector lending.
Yes,
stuff
that will happen. But regulation which plays an enabling nature, like you streamline the tax structures, you streamline the flow of funds, you enable, say, CSR funds to take these kind of exposures, that provides a lot more value. So I would kind of put regulation towards that as well. Enabling is fine. Pushing actually leads to unintended consequences.
Got it. Anurag, one thing that you'll do differently over the next 15 years, other than retire?
I'm nowhere close to retiring, so we have a long runway to go. So, see, I think whatever we've done so far is just a drop in the ocean. The space is massive, we are just about getting started. So 20 years, $1 billion is absolutely, actually, if you put it in context of, so I'm sure many of you would have heard of SDGs, Sustainable Development Goals. 2030 is the target deadline for the 17 Sustainable Development Goals. Each of these are very, very audacious. Each of them require trillions of dollars. In India alone, if you have to fulfill the SDGs, the requirement is about $30 trillion. Our focus is on the emerging 3 billion population of the world. We've done some stuff in India on the equity side, on the debt side, on the building of ecosystems. It takes time. So one thing that would be, if I was to say a wish list, if we had, more patient capital to work with, because again, building these ecosystems in remote geographies takes time. So you want to build a dairy in Orissa or a Jharkhand, it's not the same as going and building one in Gujarat. So ideally, if I had a wish list, I would want more patient capital. We've been fortunate that we've been backed by some very, very large prominent institutions from across the world. We've now set up a holding company structure where, it's more of a permanent capital vehicle. So we'd like to do that and, take our experiences in other places in Southeast Asia, in Africa, and try and replicate what we've been doing here. And actually, again, the space is so large that competition is welcome. The more the players, the better it is. It also helps to build the ecosystem. So.
Perfect. Thank you, gentlemen. And speaking of ecosystem, hope to see you guys here more often. I'm sure that this panel and this topic will become a permanent fixture as part of AIWM. I want to thank the audience, thank Aditya and his team for putting this wonderful day together. And thank you once again to Anurag, Ravi, and Shachindra. Let's give them a round of applause.